Hello and welcome. In this video, we will learn a few terms used in the world of trading. Okay? Now, if a person wants to trade in the stock market, then he needs to have these three accounts: a bank account, a demat account, and a trading account. Okay? The person may be a buyer or a seller. No matter what he is, he needs to have these three accounts. Alright? Now, what is the use of these? A bank account reflects the money in an account, or it tells you or shows you how much money a person has. Okay? A demat account reflects the details of the stocks that a person owns. For example, how many stocks does he own? Of what company does the stock belong to? And how much is the quantity of the stock that he has? All these are reflected in a demat account. Okay? For example, a person may be having 5 stocks of Infosys, 10 stocks of Wipro, and 25 stocks of Tata Steel. All these details will be reflected in the demat account. Okay? And finally, a trading account. This is required to buy or sell stocks or shares. It is by using a trading account that the stocks or shares are bought or sold. A trading account is the one that connects us with the stock exchange, and without it, we cannot buy or sell shares. Alright? Now, in recent times, these two accounts, demat and trading, are opened with a broker. So we have learnt about brokers, correct? We have Zerodha, Grow, Upstocks, Angel. All these are brokers. When you open an account with a broker, they will open both demat account and trading account for you. Alright. Now, let us see how a trade happens. Now, let us see how a trade happens. Let us assume that this is a buyer and this is a seller. Okay? The buyer can also be a seller and the seller can also be a buyer. But let us not take that case now. Let us say that this person is a buyer and this person is a seller. Okay? In his bank account, it says he has 100 rupees. In his bank account, it says he has 200 rupees. So this is what the bank account reflects: the amount of money that a person has. Okay? Next, in the demat account, it reflects how many stocks this person has. Alright? For example, this person owns 5 stocks of Tata Motors and 2 stocks of Infosys. This is reflected in the Demat account. And in this person's Demat account, it says he has 13 stocks or shares of Tata Motors and 4 stocks of Wipro. This is reflected in his Demat account. Alright. Now, let us say that the seller sells 2 stocks or shares of Tata Motors at 5 rupees each to the buyer. Okay. So we have a buyer and we have a seller. Correct? The seller has 13 stocks or shares of Tata Motors and the buyer has 5 stocks or shares of Tata Motors. This person wants to buy 2 stocks of Tata Motors and this person wants to sell 2 stocks of Tata Motors. And so, let us say that the seller sells 2 stocks of Tata Motors at 5 rupees each to the buyer. Let us say that the market price is 5 rupees. Okay. I have taken a small value to keep the math simple. Okay. Now what happens? After t plus 1 day, we will see what this is later. The transaction is completed. So now the seller has 210 rupees in his bank account and the buyer has 90 rupees in his bank account. Okay. Seller had 200 rupees previously and since he has sold 2 stocks worth 5 rupees each, he has 210 rupees now in his bank account. The buyer had 100 rupees in his account, but he gave 10 rupees to the seller to buy 2 stocks and so now his account reflects 90 rupees. Alright. Now, in the Demat account of the buyer, it says that he has 7 stocks or shares of Tata Motors. Previously, he had 5. He bought 2 now and so he has 7 stocks of Tata Motors. In the Demat account of the seller, it says he has 11 stocks of Tata Motors. Previously, he had 13. He sold 2 and so now he has 11 stocks of Tata Motors. Okay. And then the buyer has 2 stocks of Infosys and the seller has 4 stocks of Wipro. This is what the Demat account reflects. Alright. This transaction of 2 stocks happens through the trading account. So the buyer needs to have a trading account. The seller needs to have a trading account also. And through the trading account, the trade or transaction happens through the stock exchange. And for it to be completed, it takes T plus 1 day, meaning trading day plus 1 extra day. For example, let us say that you made this transaction on Monday. Okay? Monday would be the trading day, T. Plus 1 would be Tuesday. So on Tuesday, this would be reflected in your Demat account. On Monday, it would be pending, and only after 1 day it would be reflected. It needs 1 day to clear the transaction. Okay? Next, when we say that the bank account of the buyer reflects 90 rupees, it is not actually 90. And when I say that the seller's bank account reflects 210 rupees, it is not actually 210 rupees. Because they need to pay a commission to the broker. Alright? Let us say that the commission that the broker takes for a transaction is 2 rupees. For the same transaction, the buyer has to pay 2 rupees and the seller has to pay 2 rupees. Only one transaction happened, right? The seller sold 2 stocks of Tata Motors to the buyer. Even though only one transaction happened, both will have to pay commission to the broker. So 2 rupees will be taken from the buyer and 2 rupees from the seller. And ultimately, that is what will be reflected in the bank accounts of the buyer and seller. Okay? Now there are extra charges also, other charges, taxes, which I have not included in this. Alright? Yes. Now, why do brokers take commission? Brokers take commission because they want to make profit too. Theirs is a company too, right? They have invested in infrastructure and people are working for them. At the end of the day, they have to make profits too. And apart from making profit, they have some extra work to do, which we will see now. Alright. Now, we have 2 depositories. Generally, a country has one main depository, but India has 2 depositories. One is NSDL, which is promoted by NSE, and the other is CDSL, which is promoted by BSE. And both depositories are controlled by SEBI. Okay. Now, what do these do? We will learn later. Next, we have clearing corporations. We have NSCCL for NSE, ICCL for BSE, and MCX SXCCL for commodity markets. Alright. What do these clearing corporations do? We will learn later. Alright. Now, let us learn about the functions of depositories. Alright. Let us say that a company, for example, Tata Motors, has 4,000 shares, and out of those 4,000 shares, 2,000 and 1,000 are held by the promoters. The rest 1,000 shares are held by the public. Alright. Now, where is the detail of who owns how many shares stored? For example, A has 2,000 shares, B has 1,000 shares, and among the public, Anil has 100 shares, Anita has 100 shares, Ravi has 53 shares, David has 47 shares, Ravi Kumar has 700 shares. Where are these details stored? These details are stored in the depository. So the depository stores the details of who owns how many stocks or shares. Alright. A demat account reflects the shares that a person has bought through that account. You can open multiple demat accounts with multiple brokers, and each demat account will show the shares that you have bought through it. Whereas the depository maintains the complete record of all holdings a person owns across all demat accounts. Alright. For example, Anil may have bought 50 shares of Tata Motors in Zerodha and 50 shares of Tata Motors in Upstocks. Okay. The demat account of Zerodha will show that he has 50 shares. The demat account of Upstocks will show that he has 50 shares. But in the depository, it will say that Anil has a total of 100 shares of Tata Motors. Alright. Now the depository also will have the information of investments that Anil or anyone has done in mutual funds, bonds, etc. It is not only the information of shares but also of other instruments. Alright. Now, let us proceed further. Let us see how a transaction happens. Okay. Let us say that this is the buyer, Ravi Kumar, and this is the seller, Anil. Okay. Ravi Kumar wants to buy shares, whereas Anil wants to sell. Let us say that a transaction of 50 shares happens. So previously, this is the data with the depository. Anil has 100 shares, Ravi Kumar has 700 shares. Okay. After selling the shares, Anil has 50 and Ravi Kumar has 750. So basically Ravi Kumar has bought 50 from Anil. This is the updated data stored in the depository. But then someone has to give this information to the depository, correct? Saying that a transaction of 50 shares has happened. Who does this? This is done by the clearing corporation and the broker through the depository participant. Do not worry about depository participant. Okay. Now this is a dummy example made by me to make you understand the concept. In reality, we will not know from whom we are buying shares from, and we will not know to whom we are selling shares to. Alright? Yes. So the clearing corporation and the broker give the message to the depository saying that a transaction of 50 shares has happened. And for this, the brokers charge commission. Okay? For the transaction services they provide and for ensuring settlement happens smoothly. Okay? Let us see how this transaction happens. Let us say that the buyer places a buy order and the seller places a sell order of 50 shares through their brokers. When there is a price match, the stock exchange like NSE or BSE executes the transaction. The details of the transaction are sent automatically from the stock exchange to the depository, okay, either NSDL or CDSL, through the clearing corporation and depository participants. Okay, what does the clearing corporation do? Clearing corporation checks if the buyer has the money to pay the seller. It checks if the seller has the shares to sell. Okay? The clearing corporation makes sure that no one is cheated. Alright? Now, this is done by the systems that brokers are part of, and for this they charge a fee or commission. Alright? Only when the clearing corporation confirms that the money has gone from the buyer to the seller and everything is proper, the shares are reflected in the demat accounts. And for this process to complete, it takes 1 day. And that is why we say T plus 1 day. Previously it was T plus 2, now it is T plus 1. That means if you buy shares today, tomorrow they will be reflected in your demat account. Alright? Time is required for the broker and clearing corporation to send and verify the data with NSDL or CDSL and confirm the transaction. Okay? So basically the demat account holds the stocks that you own, and the depository is where the records of the stocks are stored in electric form. Okay? Now you may ask, why is this required? This is required for the companies. For example, Tata Motors. If Tata Motors wants to pay dividends to its shareholders, where will they get the data from? They will get it from the depositories, which provide the data to companies when required. So just remember that your stocks are stored in electric form in the depositories and the demat account reflects them. In earlier days, we had something called as a share certificate, but now everything is electronic and stored in depository. The depositories also send you statements every month or every quarter showing what stocks, mutual funds, or bonds you have. So, this is what a depository does. Alright. So, I hope you have understood the concept.